Health Insurance Marketplace Criticism and Controversy. One first week of operation. The message, "Please try again later," greeted many people who tried to view information on marketplace websites across the United States during the first week of operation. Websites were reported to have either crashed or to offer very sluggish response times. A statement by Todd Park, U.S. Chief Technology Officer, resolved the initial disagreement about whether the culprit was the high volume of views or deeper technical issues. He asserted that glitches were caused by unexpected high volume at the Federal Health Exchange, when the site drew 250,000 visitors instead of the 50-60,000 expected, and claimed that the site would have worked with fewer visitors. On the date the Patient Protection and Affordable Care Act of 2010 was enacted, only a few health insurance exchanges across the country were up and running. Among them were the Massachusetts Health Connector, the New York Health Pass, a nonprofit exchange, and the Utah Health Exchange. Advocates claim these exchanges make these markets more efficient, providing oversight and structure, arguing that previous health insurance markets in the United States are poorly organized and deal with wide variations in coverages and requirements among different companies, employers, and policies. It was unknown how many people in total successfully enrolled in the first week. The Federal Marketplace website was scheduled for maintenance on the weekend. CGI Group came under media scrutiny as a developer behind several marketplace websites, after numerous issues surfaced with the federal health insurance marketplace. 2. Postponement of tax penalty. On October 23, 2013, The Washington Post reported that Americans with no health insurance would have an additional 6 weeks before they would be penalized. That deadline was extended to March 31, and those who do not enroll by then may still avoid incurring penalties and getting locked out of the healthcare enrollment system this year. Exemptions and extensions apply to those living in states that use federal exchange, who may avail themselves of a special enrollment period that allows individuals to avoid penalties and enroll in a health plan by checking a blue box by mid-April 2014, stating they tried to enroll before the deadline. The New York Post reports, this method will rely on an honor system. The government will not try to determine whether the person is telling the truth. State-run exchanges have their own rules, several will be granting similar extensions. Members of the pre-existing condition insurance program, who were given a 1-month extension until the end of April 2014. 3 primary concerns. Many lower-income individuals excluded. NPR reported that large numbers of low-income people were excluded in states that did not offer Medicaid expansion to 133% of the poverty line. Premium cost too high for some people. There was some speculation that for single people between the ages of 18-35 costs of insurance would rise. Data security. Minnesota's healthcare exchange was reported to have accidentally emailed personal information of more than 2,400 insurance agents to an insurance broker, according to the Minnesota Star Tribune. Employers dropping insurance for part-timers. According to NPR, some employers such as Trader Joe's and Home Depot have decided to terminate health insurance for their part-time workers. Scams. Scams were expected because of confusion over enrollment. Restricted networks. Some exchanges have been criticized for offering health plans that necessitate too many out-of-network claims. On October 5, 2013, Seattle Children's Hospital filed a lawsuit for failure to ensure adequate network coverage when only 2 insurers included children in their marketplace plan. Cherry-picking concern. The private health insurance industry fears that restricted eligibility and a market size that is too small could result in higher premiums, encourage cherry-picking of customers by insurers, and force a clearance of the exchange. That is what some believe will happen in Texas and California in their failed exchanges. One of these factors, cherry-picking of customers, will not be possible in the state-run exchanges mandated by the ACA, because all insurance plans will be guaranteed issue in 2014. Furthermore, The law will bring millions of new enrollees into the marketplace by way of the individual mandate requirement for all citizens to purchase health insurance and increase market size. Narrow networks. Concerns have also been raised about insurance carriers' efforts to limit the number of providers in their networks to reduce costs. A study of the California marketplace confirmed these concerns, but also showed that geographic access was similar and quality at times superior in marketplace-based plans. For congressional reaction. On October 29, 2013, Representative Lee Terry introduced the Exchange Information Disclosure Act. The bill would require the United States Department of Health and Human Services to submit weekly reports to Congress and signing up for health insurance. These reports would be due every Monday until March 31, 2015, and would be available to the public. The bill would require weekly updates on the number of unique website visitors, new accounts, and new enrollments in a qualified health plan, as well as the level of coverage, separating the data by state. The bill would also require reports on efforts to fix the broken portions of the website. The House was scheduled to vote on it on January 10, 2014. On January 16, 2014, the bill was passed. 226 Republicans and 33 Democrats have voted yes to the bill. Please do not forget to subscribe for more health insurance Mango videos.